When you look at things like the difference between volatility vol, VIX vol, equity vol, some of the mechanics of the options markets that are confusing to 99.5% of the population, but matter a lot to the underlying market mechanism, are you seeing things get better?
So the short answer is yes. And you're right. There's a lot of market mechanics. I would say the one key questions investors have for us right now is they really feel the market is moving a lot. So why isn't the VIX moving more? And the short answer to that is one, because a lot of investors have taken their ball and gone home. They've degrossed the risk, and that's why they're not adding to hedges. But two, the VIX is already at such a high level, it's essentially pricing in the magnitude of the swings that we are in fact seeing.
Yeah, and so that's good news, and we need it after what's been going on, Amy. But you sounded just a bit reticent as well. What do you need to see happen in the options market for you to say, all right, guys, that's the all clear?
Yeah, look, I think we are far from there. So right now, our headline VIX number, so what essentially we think the swings in the S&P will be for the next month, is still about plus or minus 2% per day, which translates into about a 34 in the VIX. That's really high. It's actually so high that we put it in its own regime. We call it the high volatility regime. And remember, we spent most of 2021 and 2022 in a VIX regime at 20 or below. So we did have spikes, but we've never had volatility this persistently high. And the issue with that for equity participants is the whipsaw is not good, right? It makes it very hard, makes things very uninvestable relative to a VIX at 20. So, I think we need to see these volatility levels drop to a point where people feel like they can invest without that whipsaw happening as soon as they do.
Yeah, and is there some major catalyst out there? And I asked this of Jessica on crypto earlier, but I think it's important. Some major catalyst out there for you, Amy, that you are watching? Is it the next Fed meeting? Is it some earnings? Is it something else? Or is it just going to be really kind of a crazy time until the markets, through either forced selling, liquidation, all the weak hands pushed out, until that eventually happens, wherever that may be?
Yeah, unfortunately, it's either going to be the full-out capitulation, which I don't think we've seen yet, or it's going to be some resolution of something pretty major. So, we know that can't be the Fed in the sense that it's going to take them time to get to the neutral rate. But, it could potentially come from something that would surprise you, like, an earlier resolution to the Ukraine situation, which I don't think anyone has priced in. But look, it's interesting because at these levels, one thing we were speaking of with our team and clients yesterday is, at this point, what is the pain trade? If it really is true that people have degrossed and de-risked, there's a lot of sideline money, could the pain trade be to the upside? If we suddenly get something that's a tail event, but an upside tail event, then what in reality you have is maybe a scramble to jump back into the pool. And in that case, you may see volatility rise, but you may see markets rise as well.
Yeah, crazy time right now. Amy Silverman, and before we let you go, what is the number one question you're getting from clients right now?
I think people, when they see markets this low, volatility so high, and at a place where, yields are rising, but they're not really that high yet, people are asking if it's time to sell volatility. And I would say, probably not, in terms of the cohort of things that people have looked at. But in some pockets of really high quality valuation, high cash flow stocks, where there's very low leverage, perhaps it is time, because then you can use that to commit to own the stock at lower levels and get very, very attractive levels of yield that you're still not seeing elsewhere in the market.